Hi, this is Zak Mir with the Bulletin Board Heroes here at Box Markets for Tuesday, the 24th of August. Starting off with Abingdon, where we've made progress from yesterday's blowout day to the upside. I was looking for 50 pence, but I think the shares were around 45, and obviously we overshot the runway on that. Next target, I suppose, apart from the 200-day moving average, which is around 77 pence, would be for the shares to fill the gap up to 80 pence at some point intraday. Maybe they'll manage that today. Normally, that's a sort of magnet for the price action. In terms of the downside, yesterday's high was 66, so while we're above that on an end of day close basis, looking for 80 initially, and if we can clear 80 on an end of day or a weekly close basis this week, then the bigger picture target, and maybe over the next couple of months, would be up to £1.30, which sounds like it's a long way away, but would only take the shares back to where they were at the end of January. So quite a decent turnaround there for the shares. Moving along to the next contender, and it's Canadian Overseas. Here we've had the shares both still trying to find their support zone. We were looking for the stock to find support of that uptrend line from May last year at 0.37. I suppose we've just about done that. The low around 0.35.5, so worked to this stage. We've also got support from the 200-day moving average at 0.32, but so far that hasn't been required. If you're looking for a trigger, a momentum trigger to go long, then that would be an end-of-day close, I think, above 0.39. That was the floor of the gap, or the high at the peak just before the shares were suspended. So an end-of-day close back above that could be the trigger for at least a retest of the post-suspension peak, which was 0.58. Otherwise, if you're a fan of the stock looking for a bigger picture target, it's still up to 0.8, which is the top of the rising trend channel from May, and that's valid. While we hold above, I suppose, the mid-30s in the near term, which so far it looks as though we are going to do. The next stock is one which has apparently bounced off the floor of its rising trend channel, Devcor. We've had several days of bumping along that uptrend line from May, and a nice break of that resistance line from July through about 31.5 pence. Above 31.5 pence, looking for the 50-day moving average at 38 over the next few sessions, maybe over the next week or so. Big picture target, maybe for the end of next month, up to 50 pence at the top of that March rising trend channel, and only well below 30, really cancelling the idea of a rebound after what's already been quite a sharp pullback from the mid-40s. Moving along to Egdon, which has had that news from Wrestle today, which has been rated relatively positively. The shares up 5%, they're gapped higher as well. All we're looking for now is an end-of-day close through that February resistance line and the 50-day moving average at 1.4 pence, which hopefully we will get today. If we can get that, then the target here would be the 200-day moving average, perhaps as soon as the end of next month at 1.7 pence, hopefully a little bit sooner. In terms of the stop loss, we're near the lows anyway, so back below the 1.25 pence level, probably the best there for the shares. But that gap high, if it remains unfilled, would be a decent signal for Egdon. Another stock which is bouncing off the lows and hopefully will continue to do so is Edenville. Here we've broken that line of resistance from September. We've gapped through it, which is great. We've also had a bear trap rebound from below the 28 pence level. That was the February low, so the lows over the last, I suppose, the early part of August at 27.5. While we stay above the 50-day moving average at 31 pence, looking for a return to the main resistance here, main 2021 resistance at 40 pence plus by the end of next month. MediaZest also made an announcement today, and let's see where the shares are or how they're behaving now. Looks as though we've also had a bit of a breakthrough, breaking that line of resistance from the end of March, gapping through it, which sort of shows strength in the stock and maybe shows that some of the buyers and sellers have been caught off guard. All we're looking for now is an end-of-day close through 007. If we can get that, that's the position of the 200-day moving average, and above that, on an end-of-day or a weekly close basis, we could be heading towards 0.12, which is post-April resistance, maybe by the end of next month. Stop loss, obviously back below 006, which is also the area of that gap, as yet unfilled gap to the upside from February. The fact that that's unfilled and we've got another gap today is a strong point for the shares. Stock which has announced yet another contract. I think it was 8.1 million, which is obviously impressive, and sort of flow of contracts for Orphan. It's completed a bear trap gap reversal, so a bear trap from below the July 21.5 pence low. We went down to just under or around the 20 level, about below 20 pence, 19.35 last week, and we've gapped up from that. Initial target here, the 50-day moving average around 26 pence, and if we can clear that over the course of the next few sessions, I think 30 pence over the next 2 to 3 weeks seems to be achievable. Maybe it'll be even quicker than that. Be cautious, maybe wait for an end of day close above the initial August resistance at 24.5, which we should get over the next session or two. I tweeted out a charting view on Mega Diagnostics, which most people liked. One person said I was wrong, which is interesting. It's always possible to be wrong, I suppose, with the markets. The tweet suggested that breaking that line of resistance from June at 44 pence, Omega is back in bull mode. Initial target, the 50-day moving average at 50 pence, and then the target after that up to 65 pence at the 200-day line. And to nod to the person who says I'm wrong, an end of day close back below 44 pence would change the picture. But we did have bullish divergence on the daily chart or on the RSI indicator there over the last, or the sessions before the breakout yesterday. So it does seem to be that there is a bear trap rebound effect in place for the shares, especially with that push back down towards the 30 pence area that we had briefly as well. So it looks like 40 pence really the floor for Omega at the moment. Lots of shenanigans going on at Prospex, so it's worth looking at the share price chart here. The situation is that actually the chart looks pretty good. We've got a rising trend channel in place since December. Floor of the channel around the 2.5 pence level, and we've held that on several occasions. Also, that's the area of the 50-day moving average. So above 2.5 pence, looking for at least a retest of July resistance at 3.65 pence, perhaps by the end of next month. Bigger picture target, maybe by the end of the year, up towards the top of that channel from December, as high as 6 pence. And it'll be interesting to see what fundamentals and what the board and all the other stuff associated with the company will be if we can get up to the 6 pence level. But that end of year target there, 6 pence above, well above 2.5 pence, seems to be a decent prospect. Always interesting to look at stocks which are just new and have hardly any charting material to play with. Rock4 is one of them. We've had a near vertical move over the recent days, and nice looking candles. The March peak there for the shares was at 8.7 pence. So while we're above that, we're looking for further gains. There's a line of resistance that I've been able to draw with a bit of imagination from March, and that's heading towards 18 pence. And so 18 pence could be the target for the shares by the end of next month while we hold above 8.7 pence. And that might be something that people find attractive. Moving on to Xtract, but there was a bit of director buying to start the week. Here we've got a situation where the shares have sort of gone into a sideways flow. What we're looking for now really is an end of day close back above the 50-day moving average at just under 4 pence. We can get that, then a retest of August resistance at 4.5 pence could and should be on the cards. The reason for the inclusion today, and the reason that one can remain optimistic, is that the 200-day moving average, currently at 4.3 pence, is still rising. And that tends to be something that drags the share price higher. On to Westminster Group, which I know has its fans, stock market cognoscenti, like this situation, and has to be said, with that massive gap to the upside that we had in June, has been held. We never even went below the top of that gap, which is a major plus, technical and charting plus. Also got the 50-day moving average rising sharply, and we've closed above that yesterday. In fact, we closed above that earlier in the month, but this one, with the gap that we had higher yesterday, really gives it a bit of a solid look to it. In terms of what the upside could be, it looks like we're in a rising trend channel heading towards 7.5 pence. The floor of the channel, I suppose, is around the area of the 50-day moving average at 4.7 pence, so above 4.7, looking for 7.5, perhaps as soon as the end of that next month. So this is looking pretty strong at the moment, and I suppose there's also a line of resistance that we broke there yesterday as well, around 5.5 pence. So above 5.5, certainly up to 7.5, but the overall picture here above 4.7 support, looking for a decent climb on Westminster Group. Stock I've just forgotten to include earlier in the sequence is Jubilee Metals. Some news from the company today, and the shares trying to recover that 200-day moving average around 15 pence. Obviously, it was disappointing that we broke that line of support from December around 17 pence earlier in the month. But a quick recovery or a weekly close back above the 15 pence level should be enough to take the shares back up to the 18 pence area, which was August resistance for the shares. That's it from me today. More updates tomorrow.